So in one of my previous videos, I had talked about one of the trolls uh, complaining that we had missed part of the move in oil, and we got out right in here, right at about $60. We were getting pretty close to the 200-day moving average, which was just a little bit above that, I think. Let me see if I can change this over. All right, so we took, we got in right here at the bottom, and we rode a very nice move. We got pretty close to the 200-day moving average. These obvious resistance zones. Sometimes markets will turn and correct before they actually get there. So just to be safe, uh, we exited, or I recommended exiting or putting a tight stop on positions at this point, just because we were close enough. We'd made, this was an 80% move in the triple leveraged oil fund. So this was an 80% gain in 2 months. Um, and just to protect against the possibility that maybe oil might correct and then make another run at the 200-day moving average. That was close enough. That was a good place to take profits. And then somewhere, right in this area here, I get, start to get emails that, we were missing the move, and which was ridiculous. We didn't miss the move. We made an insane amount of money on this move. We just didn't pick the exact top. And you can see what happened to the people here that couldn't control their greed. They got caught at the top. And now they've lost, basically in 2 days, they've lost all of the profits that they might have made, if they had gotten in here when I started getting these emails. They're right back to zero. So, sure, we didn't catch all of these profits, and nobody is ever going to catch 100% of the move. Many dumb money, type traders just can can never grasp that concept that you're just playing musical chairs when you get into a rally that's too mature. Yes, sure, maybe it can keep going higher, but it can also crash on you and take all of your profits away very quickly. The stock market is in a similar situation. It's very deep into a daily and an intermediate cycle, and it's at risk of a sudden move back down. So the correct strategy is, when things become risky, control greed. If you've got some nice profits, and in here we had some insanely large profits, um, don't be afraid to book those profits and miss some of the rest of the move if it occurs, because there's always going to be a correction, and you will always get a, a, a I'm going to say a more low risk opportunity. At this point, anything past 60, this was high risk, because um, the risk of something like this happening and taking away all of your gains very quickly can occur. Whereas if you can get in down here at the bottom, and maybe you don't even time it perfectly, maybe you get in too early, maybe you got in right here, it's still, your risk reward is better, because you're eventually going to get a bottom, and then you get, once the bottom is in, then you got many weeks of upside potential ahead. At $60, we just probably didn't have a whole lot of weeks of upside potential at that point. And even if we did have some potential, if we didn't time the exact top perfectly, we were going to lose those gains anyway. And this is exactly what happened to the troll that was emailing me about missing the move. Is he just lost all of his gains in 2 days anyway. So there are periods where you should control greed, and then there are periods where you need to be greedy. At bottoms of these corrections, when everybody else is fearful, this is when you need to be greedy, and you need to control recency bias, and understand that the bigger the sell-off, the bigger the opportunity, and that these are really good opportunities. It's just that in real time, you don't know that this is coming. But if you've been in this game long enough, you do realize that The bigger the sell-off, the more extreme it is, the bigger the opportunity, and usually the bigger this part tends to be. So, um, and not an opportunity up here. This is where dumb money traders become very bullish, where people are afraid that they're missing the move. Down here, this is where I'm bullish, where I want to try and get my subscribers in. The potential for sustained move is much better at bottoms, when everybody is fearful, than at tops here where everybody is afraid of missing any more of the move. This is generally what happens is a top will come. Very rarely do you time it perfectly, and then you end up losing a big chunk of the gains that you made by hanging on too long anyway. And if you get one of these really extremely right translated cycles, then this is kind of what they tend to do, is they have these kind of a mini crash type events at the very tail end, simply because the cycle is very long and it's just running out of time for the correction to occur. So let's say the normal duration of the intermediate cycle is 20 weeks. If you rally for 18 weeks, then you probably only got 2 or 3 weeks for the correction to run its course. So in order for it to do that, it usually tends to occur as a kind of a mini crash event. And the reason is people get very complacent, and that email was a sign of complacency. And smart money, dumb money retail traders become very, very confident, very complacent. Smart money retail traders become very nervous, and they've got their finger on the sell button, ready to push it at any minute. And so what happens is you get people like that um, are buying at the top, convinced that the move is just going to continue indefinitely. You've got smart money traders that are becoming very nervous and ready to sell at a moment's notice. And so when the smart money traders start to sense that a profit-taking event is coming, they all hit the sell button. And then what will happen is the troll type people, the dumb money traders that are buying up here, that they get caught in the correction, and then they'll capitulate too as price moves back below their entry level, and they end up losing money um, because they got too bullish too late in the cycle. So I think we're going to have a potential opportunity here in oil in the next several weeks. This might turn into an intermediate decline. If it does, then it should run for at least 3 to 4 weeks maybe, and maybe we even come back down. I think the 50% retracement of this rally is somewhere back down here around $50, $55. I mean, somewhere in this level. So it's not out of the question that oil could retrace back down to this level, and that would be the buying opportunity where you have a lot more potential for multiple weeks of rally, something where you can make gains and sustain those gains rather than uh, buying up here, afraid that you're going to miss more of the move, and then you end up getting caught in a correction.